Breakfast Club. My name is Darren Hancock, and here it is, the March the 5th, 2026. And as usual, the markets are chopping around. This is one of those markets that will eat you up if you're not careful. Low leverage. Be very precise in your entries. Very tight on your stop losses. Because if it turns, it's going to turn back against you really quickly. Like, unbelievable. That didn't even make it to the rejection block. Like, just these last 2 hours here from 3 o'clock to 4 o'clock. Craziness. So let's see what we get for this. Got some sensitive levels here. I'm looking for a reaction off of each. So if this is a big run day, so everybody's kind of hoping for a nice big run lower this morning, I would imagine. So far it's freezing right on here. The bodies are respecting that. I want to see it come back through here. Trust my two there. No, that's gonna take it. So the outside chances we can go up to here. Still have this premium level here. Bodies are still underneath here. The macro is just starting now. It's at 50. Okay, let's see if it closes through this level. Good morning, Hadid. Derek, good morning. We're close through that, so we're looking for the rest of this busy now. That's going to go higher. Let's get back something I just lost there. So we're retesting this one now. Let's go see it break through here. Oh, you gotta take this one here too. I forgot that one. How you guys doing this morning? Harley's just in a slop. Glad you guys are doing fine there, Hadi. What's the weather like out east there? Is it as cold as it is here? Usually you guys get some pretty mild weather there sometimes. That's the last little retest there. Up inside this premium one here. If you pull this right up to the very last one, you would see right there. Oh. Nobody's here yet. Oh, you're still sick. You got to get some of that royal jelly, Derek. Mind you, I guess the queen needs it all now. Hey, well, they're trying to stay warm. That Manaluka stuff's supposed to be really good for you, too. There's a nice little box-to-box run. From box to box. Reverse at the consequent encroachment. I want to see that one pop through here. Well, I hit the sell button there, but not sure it's giving me the trades right away. Wait for the next model. Put another one here. And one more right there. This doesn't need to go that high. Been helping your sore throat at least. Well, that's good. Navage and a tissue box. I hope you got the puffs with lotion. Yeah, yeah. Yeah, stay above there. Yep. You're looking for a sell in EU on the euro dollar. Well, so far so good. The difference between the two. British pound has been above it, below it, and now it's sitting right in the middle. This one has never been above it, not even wick through the high of it. It's traded below it, and now it's just trying to get back to the low. So this is obviously the stronger of the two. Right now it's holding out as long as it can. You see how the euro's losing against the British pound. So this is the stronger of the two. So what you want to see now is you want to see this break above here to go higher, or this finally give up the ghost. If the American dollar starts pushing higher, it needs to get on top of here. It's had 3 attempts or multiple attempts to get back through here. Well, 3 attempts to get back through there, and it's failing. So if we can get on top of this, get some support above here, and then push that higher. Right there on that high of that BISI is the absolute freeze point, because it's also the bull one here. It's also that midpoint of that. So I want to see that climb up above there, come back, find some support at that, and start pushing higher. That'll force these guys lower. And then you have to look for daily objectives. You start looking for the yesterday's low, and then that if you take yesterday's low, then chances are we're at 75%, and then the full run to the 2-day look back, 115. Yeah, it's really choppy. It's just like sitting sideways. I want to see that come back into here, Derek. See how it's ran these lows out, created this little civvy below it, only came up and bodies have filled it, but no bodies have broke above it yet. So that's the showing more weakness, and we come back and just find some support. You're going to see it break through here off this consolidation, nice displacement candle, give you a nice little fair value gap here with an institutional order flow entry drill, or a retest of the lows and send it lower, and starting a target down here. Made a little overnight money in GU and EU. Need to take lower lows. Looking for another sell off. 5-minute fair value gap below. Oh, you're in the 5-minute zone. Okay. Speed thresholds holding price right now on the 15. That's a long right there. You're just hitting 50% now. So you're looking for that 70% box. That's the target I'd be looking for right now. To look for, and then I'd start looking for a reversal there on a 1-minute chart. This should be somewhere around your 70% optimum trade entry reversal. Good. I think we're going to get a little back there. I think we're going to get a institutional order flow entry drill here. This is going to be small, and then we're going to start off running up into here, 35 level. So we could see this run all the way back up into here. I'm just going to close that out. Because we're not getting any acceleration out of here right away. This is what I'm looking for, is this to run back up into the base of this 1 hour candle right at 32, which will put us right up in here. There's a couple of little imbalances in that. There's big suspension blocks in here, so you could almost take this whole thing here. So you've got that premium there still. I'll leave that one there. And we got this one here. But in order to get there, we got to break this. Get through here. 24, 813. Looking for, oh, you're going lower? 24, 813. It's going to get there, I think. I just think it's going to give us an opening push back up into here. And if you got a stop loss tight, I think it's going to run us out here. So I'm going to wait till it opens here and see what we got. It'd be nice to see it just up and leave real quick, but while you're looking for an entry up here, when Reza. See you later there, Derek. Hope you get better soon, buddy. This one looking at. Hmm. 5 minute can just leave us now. We got conflicting views now because we've already hit the no-go zone for a run lower. That's the run lower. So now you're looking for a Model 4 on a 5 minute. It ain't done yet, Hadi. We have the open. We have a nice little Judas swing and break us in. This Judas swing will give everybody the impression that we've just changed directions instead of heading back up now that we've taken these lows. So you can ride the Judas swing up and then wait for the reversal, or just wait for the reversal. Just wait for 9:30. That's an institutional order flow entry drill. If you're looking to go lower, I want to see this next hour. I want to see this stay small, though. If we start getting this huge extension, not so good. Then these become the area of interest. Too much. Don't count us out yet, Hadi. Not the precision you're looking for, but See where the body sits. Above it, below it. Wait for structure shift now. You're already in the premium array already. Back through the discount array. This has to hold in order to go lower. If it doesn't, then you have to wait for that to break, and you're already through the premium already, so you got to wait for this whole cluster, because this is the CAM 3 setup here. And your CAM model 1 and 2 in here. That's the 3 leg. Right to there. Send that higher from there. Even take a line on that. I'm gonna wait. That looks like a nice long there. Morning, Hans. Run back in here. Watch where that body ends now. Let's close through there now. It's gonna run lower. Meanwhile, we haven't broken the high. You usually have to break this high first, come back to it for the CAM 3. So this isn't a CAM 3 ready setup yet. To get above here first. Get above the consolidation, then come back into the consolidation for 1, 2, and then 3 is here. This is just a retest of the SIBI. Here. Send that higher. We took out the mean threshold of that candle. Then look for the SIBI below you. There's the SIBI below you. So you want to see that go higher from here. And if it breaks through it, then look for a retest and send it lower. Now we're looking for this to give us a little run back in here, a little bit deeper first. So anticipating this should run higher. But if that sits there nice and still for the next half hour and just bangs back and forth in here, and then finally makes its run up here real quick, or right at 9:30 here, we get the push higher. I'd like to see that refill right there inside here. There's the open. So far, so good. Right in the money. There's the fill. Watch for the 50%. It's right there. 63. And then you have 80 to 87. There. I think this is the Judas run up now, what we were talking about. Now I'm looking for any sign of us giving us a reversal here. The ultimate is right there at 87. Sorry, 85. Now, if it's precision, it should come up and just tag that right there. There's the premium already hit. So we're looking for consequent encroachment to find some sensitivity, or the very wick right there. So now we're expecting to see if that rolls over here and comes lower, or if we just touch that 85 level. No, we're going through it now. All the bodies are going to respect that. Fair enough. Let's see what happens here. Let's see if we get a nice little reversal here. The next level of God is 128. What's the retest? 128. That's the box right there. I'll put you right into here. That's a hell of a Judas swing. This is a nice little retest here, hey? Look at that. Didn't even see that. Come back there and tag that and send it higher. This is the 38. Right on the money. I didn't just form fit that, by the way. I checked the low of that candle. And that is the low of that candle right there. Or the high, sorry, the high of that candle. That's exactly where it is. So that's the tag of the box. Now I want to see if we can get a close down here. And then we'll look for a retest of this. Now all you want to see it's not what I want to see. So I'll come down and hit this. That's the problem. Come down and hit this. Gonna push higher. This would be ugly if that's another huge run up. We got this totally wrong, and we're gonna go higher. And the wicks are just definitely causing some damage. So let's wait and see now. That's that damn. Not quite the 830 either. You want to see? I guess you want to see it get below this 830, retest it, and go lower. Cheeky bastard! Look at that, eh? Picked the right direction, but these wicks are just killing me. So this is the bounce off of here. We want to make sure we can get through here on a close. Right now, these wicks are just slicing and dicing. If you're looking for perfection, they're going to slice you up, man. So you have to make a decision. Either you make your rules flexible to accommodate the market, which means you're going to get your ass handed to you real quick with these wicks, or you stay rigid with your rules and wait for the market to either ease up or don't even bother trading. Bastard Wicks. The body's respecting that still. Take two there. You would have to break this one, and then take me out, and that's it. I'd be done for the day. There you go. You get to see me take a couple of big hits. That's ridiculous. Damn. Try to go off your 830 Hadi. Didn't work. Didn't work. Got this one. This one. We're back up here again now. Oh, man. Morning, Russell. Wait for 10 o'clock now. This is the hourly no-go zone. So that's the consequent encroachment of that no-go zone. See how it's finding some sensitivity there right now. Just keep their data points, their key data points. I want to see if they hold now. I'm not interested in going lower until we break through here. Also have my next level lined up in case we lose this one. Top of the box. Interesting, hey? 3 specific data points. Look at the sensitivity you got in them. Now you take this into quarters. $25, $50, almost $75. I guess it was no Judas. It was actually the run of the day. It's a nice little turn there. There's 182. X is 189. So you've got the highs next, the 209, and then the higher high. So 209. This is the 206. And then the 209. 209.75. Look at that, hey? Boom. I love when I see it snap it and pull away like that. We'll do this. This is the ceiling you want to see hold. So the red line, hold. And then I'll put the next one down. If that one doesn't hold, or that one holds, then we'll look for the next one below us. Damn wicks are still doing the damage, eh? I'm demanding precision from it, and it's just wicking me out every time. I'm getting the right direction. It just keeps wicking me out, so I didn't want to see that get broken to the upside. So I was super tight. That's all it took. And I didn't even want to see that mean threshold there get taken, but it did that too. And we're still getting in the right direction. So now this is the laser precision we're looking for. We're getting beat up on it. So this isn't the market for me. Stay on the horse here, Darren. Let's see if we can't recover something here. Right here. You want to see that level there. Get tagged, so I don't want to see us get back through here, which is the top of the box. You can load on 2 there. You put 2 here. And stop loss has to go there. That one's been worked already. We haven't quite taken this low here, so keep your eyes on this little guy right here. That's it. It's got to stop there. Fucking wick's gonna come back and take me again. Fuck, it got again. Son of a bitch. And this is where you start to say, shall I make my rules flexible, right? Then you're trying to cater to the market instead of having the market just like, no, demand that level because this is the shit that fucks you up. So now you see this level here. Wait and see if it closes below that. Even if you would have put it there, it still would have nipped you right there. Wait for the close below here. So now Watch that red box. Now you gotta switch it up. If you get lower, I'll look for this red. I retap at this into here, and then send that higher. You know, the way I wanted to. What's ES up to? It's a lot of chop. Look at that no-go zone, eh? Look how it just keeps running into it multiple times here and rejecting off of it. That's super shitty price action, but the go no-go zone's clearly holding. London highs next, you figure, hey? Close below, retest, come lower. I want to see it pull back into here and then send that lower. Frustrating when you're picking the direction and the wicks just did all this damage. Very frustrating. Like how many times? It must have been 3-4 times I went short there. Well, didn't get a chance to catch it. That pisses me off. Whatever. That's the market for you. The unpredictability. For a retest on this low. Just give it a little pop up there. Well, you got me beat, Russell. I got the right directions, but I'm getting the, I'm like 0 for 4 or 6 or something like that this morning. We broke through the premium, the old premium. Retest. Go lower. We're at the top of this consolidation here now. Darren, there always comes a new day, a new opportunity. Absolutely. Absolutely. I tell you, when we get the market settles down and starts acting appropriately, like we're still getting the right direction, but the problem is the wicks. The wicks are doing the damage. If you want a precise level, like look at this, that just stops right there. I'm looking for that level. Even a bit of wick through here now would have been nice, but no, they're still not giving you what we want. Even when you're expecting now you want shitty wick action, you still don't get the precision you want. But it is now after 10 o'clock, right? What a perfect level there, hey? That's in case you're all looking for that London high, Asia high, all that kind of crap. You really got to be careful about when you saw me coming up and bringing the line up there like that all the time. I'm just looking for the next PD array, the next PD array. Reaching for 10 PD arrays above you is gambling. You got to say, is this getting held? If it gets broken, good. What's the next one? Where's the support to show you're going to reach for the next one? Where does that fail? Once it hits that, where does it fail to show you that you go in a different direction? So if you keep overshooting PD arrays, keep saying, oh, it's going for the London highs, or it's going for, you know, way up here, the new day opening gaps and stuff, follow it along. Each PD array should get broken then to the upside, but always stay on the next PD array. Otherwise, this shit's going to happen to you. And that's right at the rejection block, which is right there. That's the one I was calling for, either the 209 or 210, 2975, whatever that candle's high is here. Sorry, it's open. Open right here. Its open was 209.75. The high on this candle, right here, the high on this candle is right here, sorry, 209.75. 209.75. That's why you look at the PD arrays. And how many times have I told you at the rejection block, pay yourself at the rejection block? So you talk about precision exit, like, holy shit, you can't ask for nicer than that. And now you look for, do I see a reversal here? You've got Sibby here, or Bissy, so that's what I'm trying to get on, this Bissy. And it started going lower, and then came back, took me out, came back, took me out again, and then finally went in the direction I wanted it to go. So I was trying to get in on that 209.75 reversal. And that was the damage. These wicks were doing the damage enough to take me out. Otherwise, I'd still be in this big, massive run down here now. But that's the logic. Makes sense, but fucking wicks are causing the damage today. So anyway, that's my logic. Take it or leave it. Grain of salt, whatever you want. Just be careful when you overreach PD arrays. You better have support. If you're reaching for an hour, 2 hour PD array, make sure that on the hour, 15 minute, 5 minute, that it's supporting the reach for that next PD array. But if you're like 3 or 4 or 5 ahead, I say no until. You don't know what trail the horse is going down until he's on the trail, until he's made his turn and he's on the trail. If that makes any sense to you. So you're looking for a retest on these lows and this no-go zone. Now here's the challenge of these, because they could be the reversal. So you want to see that tag there and roll over and come back lower now. You don't want to see it eat through that. You want to see a portion of this stay open. Right there is good enough. That's precision. You want to see the precision right there, stop and come lower. Now, if you want to give it wiggle room, there's a full fill there. And then you've got the mean threshold. Those are the next 3 PD arrays. 1, 2, 3. That's the one you want to see hold. And we'll see if that goes lower. And watch how it's acting here too. If you see it, tag it, and you see it pulling away right away, that's good. That's what you want to see, right? And then if you see the next candle starting to come back up there again, that's not what you want to see. You want to just see it hit it, roll over, and go lower. With intention now, like just let's go. So they're very specific arrays you want to look for to see. Let's get out of here now. Let's go. See that little run down there and then the pop back up again? Let's get down there. You don't want to see this starting to move up again. So if you're entered in on this one, you'd say, that's it. My stop loss has to go there. If we're starting to pop through it, not interested. That's the demand that you want for your price action, has to be right there, right? So that would be your like stop loss would be sitting right there. If that's your entry, it's now break even. And you want to see it as soon as it gets below here, move into profit, pay yourself at rejection block. Because there's 3 arrays below you here right now. It's this one, and this one. You've already hit the first one. You want to see it really start driving through here. 1 candle, you want to see it take out 3 of them, then you can say, all right, your ass is next. We're going to keep going in the direction we want it to go. So I would pump that right there. Oops. Right to break, pay for the trade now, because this whole repeat back in here, now I'm out. I'd be out of that. Once again, a wick's doing its thing. And here, if it turns against you, we've just come back to that level there, right? And now you know why you demand the market give you what you want, because even that whole close has already happened there now, right? And that's not what you want to see. That's the demand. So now if we close above here, remember we're talking about this was the no-go zone. This is go, this is no-go, and we're going in a new direction, and you're right up into the bull trap. So it has to come back, tag this box here now, and the no-go zone is sitting right in the middle of it. And then you want to see that bull trap get taken to the upside, and we're coming back inside this range again. See how the wick's freaking doing some slicing and dicing. Watch to see if we don't close above here now. And we did. So watch the mean threshold, send that higher. Right there, that's where you want to hold it. With precision, you want to see it stop right there. And it's right on a 38 candle. Crazy Ivan, he sees you, he's going to come for you. This is the Crazy Ivan time. There's 38, right off the mean threshold. He sees you. He's coming for you. Crazy Ivan. So now you start doing this. I should start the show after 10 o'clock. After this whole opening, things start to settle down. Look for that 50% right here, which should put you right inside this breaker here. As soon as you get to 50%, you take half your trade off, move your stop loss into break even plus the cost of the trade. Well, as soon as it takes out that high there, I'd be like break even. So look for this 50% and take a portion, half your trade off right there now. Good. Internal range liquidity hunt done. Now that's precision. That's what we're looking for way up here, right? That's the demand of precision level. And after you've been beat up that many times, even though I'm calling it, clearly I'm not willing to take any more hits. So the psychology is taken over here. I've taken enough hits that I don't even want to enter into it, even when it's precise now. Does that make sense? So you got to recognize when you're mentally not in the game anymore. You got your 50% there. Good for you, Russell. Did you get 62% on that? Not yet. So you just move your stop loss into break even. Half your trade is off. Let it run. You got your portion of your trade. You got a big chunk of the internal range liquidity here, but leave a portion on for it to do the work. So if you hit to 60%, then you're really in profit because your stop loss will run right up to the 50%, and then the 62% you'll be 60% of your trade will be off, and the last 40% will be sitting in profit. Mark, key tip, your trap occurs before taking a high or a low of the range, maybe a week, and taken immediately after a sweep. Your trap that occurs before taking a high or a low of a range, maybe weak, and taken immediately after a sweep. I'm not quite sure I understand what you're saying there, Mark. So far you've got this one supported. This level here is now supported. Now we're looking for that 62%. We're assuming that you're, I'll put it down here. There's your break even plus the cost of the trade. So you're right there. Watch this level here. So if your last 50% of your trade is here, watch this. If you close below that in the next 3 seconds, close your trade out because you got to change in direction there. See, like right on it. So now I'd move my stop loss to here in case that just tags that and keeps coming lower. Right, so now you got cost of your trade plus a little bit more on the last 50%, and you're watching this level right here. See how it's literally closed on it? It hasn't closed below it yet. So you can chase each candle up as it goes now, or as soon as it tags you, you're out. Or it closes below there. If it closes in here, take your trade off. Or you might be just a hunt to 50% guy. I just want 50% of that and I'll take it all off there. That's fine. That's fine too. Keep coming. Now you can move it to here. Wait for that 62% again, and then you can bump it up to 50% again if you have to. Right now, I'm making sure that this level here, I don't want to see get broken again now. So you can either sit right below it, or you can sit right on it. Right there. It's been worked now. You want to see that leave. It could come all the way back, tag that. This has been validated, so 50%. $0.41. Watch the 0.41 level right there. You'd be out. That's that retouch. We're just going to assume that that's that level I don't want to see get taken out now. So I would have been out of there. If you're still leaving it down here, just plus the cost of the trade. Let's see if that continues to work out. If we stay below that level. Because we're above this now, and we're just tagging this again. So that's perfect. Right there is the bottom of that. That's a legitimate retag. So should start going higher now. U1029 candle, or your 1029 candle, is the trap. The 1029 candle, yeah, the 1029 candle is the trap or the swing that swept the lows. That candle is now weak if price sweeps and closes back in the range. It is weak, yeah. And then you want it to act as strength once you get above it. It's strong to resist you. Once you break through it, you want the strength to hold you now. You want this to solidify and hold your price up and start running higher. So wait for 62% here. Given I would have been out here, if you would just leave it alone down here, as soon as it hits 62, we're going to take this thing and move it to 50%. We want to see a body get above here now. Then this will move to one tick below that low. Once you hit a body above here, or 62%. Now we're just using the take profit model 1, and we're really adding extra stuff to it, but just a simple take profit model 1, you'd be sitting at half your trade to be off, you'd be break even, and you'd be sitting here waiting anyway. You wouldn't be doing all this other little minor crap inside here, and you're just waiting for 62 to get hit, or for you to come back and get your stop loss taken in profit, by the way. So it's a zero stress trade, and you're watching this thing bouncing around in here going, I don't care. I've taken a portion of my trade out, and the rest is in profit. We'll just see what happens. At least my Bitcoin trade is panning out. I make back some of the money I lost in and all this crap here now in Bitcoin. There was this retest right here. We just dropped below it. We came back, retested it. I took a short there. This is still holding on. Holding on, man. Make it to 65 or 62. And Bitcoin's now moved back into no risk. Get ready for that 62, you guys. Watch this. See how once it comes back, once you break that mark on the upside, which is right there, it becomes its mean threshold, which is what we talked about, is a perfect entry for a long. That's why we're talking about this first take profit model 1. It's a precision level. So watch that hit 62 now. There's 62. You move to 50%. Now that trade is 50%. You take another 10% out right there. Now if it comes back and tags you out, you're done. Internal range liquidity on 60% of your trade is off. The other 40% is sitting in profit as well. So then you'll take another 10% off there. It's 70. And then 79% puts you right into that old swing there. So your next target is sitting right here. And remember, this is the place for the optimum trade entry reversal. It starts at 62, then 70. So you've already got lion's share of your profits taken out for the internal range low-hanging fruit model. I just took my stop loss. Small profit, I suppose. Get ready to move this as soon as it hits 70. So you can put a limit order in there saying 1 is off there, or just take your stop loss. If you've only got 1 on here, this is how you'd be managing it from the back end with just 1 on. You're always going to be 1 below where the profit is. The problem with starting with 1 is if you enter in here and you reach 50%, you either close your 1 trade out, or you just move to break even and hope it makes it to 62. So at least you're in profit with your 1 sitting here, and you're letting that other one, that's all the profit you're giving up. Whereas if you entered in on 1 down here and you got to 50% and you didn't pay yourself and it came back and took you out, like 50% was the rollover, then all you get out of that was a break even plus the cost of the trade, because you're looking for it to run higher, right? It's kind of like gambling on it going higher. You should have at least 2 on there, so you can take 1 off there and let the rest run. So if you're sitting right here, this is the risk you have of it. And you can almost be like 1 tick below that right there. Like sometimes it comes down and tags right off 50% and goes higher. There's 50. And you should be out there. That'd be it. You'd be done. So you got 40% or 60% of your trade off there, and the last 40% was off there. Your entry was down here. You're in profit. You've got a big chunk out of there. So if that reverses on you now, it takes out this low, you'll be glad you paid yourself at 62%. That is internal range liquidity hunt model 1. I'll be right back. So we're in the middle of the range right now in this little leg here, and it's 11 o'clock. Do we make a move on this high, or do we make a move on that low? Didn't even get back to that 5-minute no-go zone. At least I don't think we did. No. That's our weed up to there, abs. Look at that, we opened above it, just tagged into it, and went higher. Now you gotta wait for it to break above here to start running into this premium box here. It's tough when they open and gap right away. Soybeans, sure. Do I even have soybeans on here? Oh, we do right here. That would have been a nice soybean run, hey? Yeesh. What time frame do you want to look at on Mark? Long-term weekly. It's perfect. Should have been there 2 weeks ago. See this candle right here? And again, I'm not form fitting it. It's what I show you guys every single day on a 1-minute chart. Body trades above that candle. Come back, tag it, go long. So right there, when it's coming into here, let's go down and break this down now for this February 17th. February 17th. So we're going to break this down, and we're looking right here on February 17th for an entry. So if the weekly, if it closes here, the next week that opens, you're looking for a Monday or Tuesday to make a low here. Okay, or sorry, a Tuesday or Wednesday to make a low here. That's what we're looking for. Okay, and at worst, if this was lagging around in here, we're looking for oh, that was a Tuesday. Sorry, you can see right at the bottom here. Tuesday makes the low of the week. Okay, so that's perfect. So this Tuesday, Wednesday. So Tuesday, we're looking for the Tuesday to trade back into here, and we're looking for hourly or 4-hour for a long, and we're aiming for that high right there. It's the next high. Okay, so let's break it down. Daily on the 17th, we're looking for, right? Here's the Tuesday. Sorry, where's Tuesday? Tuesday's right here. Friday, Tuesday. It's Tuesday. So we're looking for a retest of this candle here. So Tuesday, you don't get it. Tuesday, Wednesday, Thursday. It's not until the following week. It looked like Tuesday was going to tag it. That was Friday. This is 1, 2, 3, the 19th, the 20th, right there. Came back and tagged it. So why was it the week? Oh, yeah, it's because it's the weekly. It's Friday. So what looked like the week of Friday, of Tuesday, this Friday was actually on Friday that it hit that. Okay. So go to the daily. Friday, we're looking for the Friday comes back and finally hits that level inside the volume imbalance or price imbalance here. We've tagged that level. So Friday, you're looking for a run up. Not Thursday, not Tuesday, not Wednesday. It was just kind of waffling around here. So you're looking for Friday, the reverse. So 4-hour, looking for Friday, the 19th. There's Friday. Was it the Friday the 20th? Friday the 20th, sorry. Looking for a reversal. You don't see, I see nothing in here until we break this on the upside and then come back into it there, trade below it. I would have been out. So it wouldn't have worked for me anyway. So let's look for an hour on the 20th. Right here. You have to wait for structure break above the high. That's it right there. Trades through it on a close. Look for that. Trades through that. Yeah, that would have been, according to my rules, that would have been, I would have been in and out and taking losses there. Unless you catch that on a long, expecting that to get hit on the weekly and then just let it ride from there. That's, I see nothing in here for an easy reversal. See how we stayed inside here for hours and hours before we finally broke these little highs, at least one candle highs. I'm going to look at this here. And that there. And this here. Stretch that out. Stretch that out. Stretch that out. And watch how they kind of see if any of this overlaps. Those are the key levels you're looking for here. And then you've got the SIBI, the BISI. Once the SIBI gets broken to the upside, look at that. Even this trades through on the downside. Now, it would have been a frustrating week unless you would have gone, as soon as it hits this level, breaks that level, I'll leave my stop loss at the entrance and then go. If you're trading on a weekly level, you might want to just leave it for all this shenanigans here. Once that high gets broken, move to break even and wait. Yeah, I don't know. I've never traded on a weekly level like that, so I don't have a if your entry's in here. Yeah, I don't have a strategy for trading a long term using an hourly. Unless it just comes back down there at 10 o'clock in the morning on the Friday. Hits it and you go long from there. I don't know. I don't know how you'd strategize that. But if that's just the weekly objective you'd be aiming for, you catch it on a Friday. Now, what you could do, I suppose, if you're on a weekly level like this, I'm just trying to come up with a strategy here that would work. If you're looking for this level right here, so as soon as you trade above it, I'm going to put my entry in here and my stop loss will go down here. So that's the risking 1 or 2% of your account. And as soon as it takes that high, pay yourself, move to break even, and let the rest ride. If that makes any sense. First objective. So if you're in that for the long haul, you have to wait a couple of weeks. Like we would on if that was a 1 minute candle, we enter in here, your stop, your go no go line is right there at the midpoint. And your stop loss goes 1 tick below that low. And as soon as you take out that high, pay yourself, move to break even, and I'll let it run. I think that's how I would do it there, Mark. If we're treating this 1 week candle like a 1 minute candle, that's a 1 minute strategy we use. So you'd have to do the same thing on the one. It's got to be fractal, right? You can't just form fit it for each level. If you're in a long-term trade perspective, you'd have to treat it the same way. You'd have to have it sitting down here and risk 1 or 2%, whatever your risk level is for that particular asset. 1 or 2%, whatever your trade typically is. So that's how I would probably look at that if I was trading that on a weekly level. Don't know if that helps you or not. Long-term weekly. This is a long-term hold. Good. And thank you, Darren. See you later, Hadi. It's been in since December. Oh, you've been in since December. You got some kahunas, man. Like early December or late December? Yeah, I don't see anything in here in December. But if you're in on that in December, I don't see anything on a weekly level that gives you a long there in December. But if that level we talked about down here is the level you're looking for right there and there, and you see it trade above it right here, and that's January. Confirmation is January 27th. All this stuff in here is all the way down to scaling in 1, 2, 3. All three of them are scaled in. Your stop loss would be sitting below the low, and you let it run. As soon as it takes out the high, move to break even. Pay yourself a portion there, let the rest run. And you would have been in for quite some time now. That's how I can see that, which is what we're looking for in all these stocks and stuff over here. Same kind of thing for March. Late December. Okay, good for you. Good for you. So you should be in, your stock should be, or your trade should be in a safe zone right now. You should be risk-free. Good trade there, Mark. Now, if you take your, let's just do this. I'm just curious to see if, this is an old version, but I'm just curious. I'm just playing here now because I've got, oh, it's already marked them out. Let's mark it right at there. This one's a winner. This one's a winner. This one's a winner. That one's a winner. This one's a winner. These are all winners. Those are where they close out. So you got 1, 2, 3, 4, 5, 6, 7. 7 wins and 3 losses. That's using the old one anyway. So they should go lower here now. Put my stop loss right there. So it's above the mean threshold of that candle. Gives this no-go zone a chance to work, and then it gives you this mean threshold here a chance to work. And that's the last trade of the day, and I will let that run. And I'm looking for a big downside here. $74. That's that. That's where I'm looking for. 70% win rate with an older model. Yeah. With an old one. Look at that fucking thing. Saying, no, Darren, you're not allowed to play today. No playing for you. That's the lesson, man. Stay out of the market. That's like an instant comeback and beat you up. I thought, oh, I like that. There's a no-go zone. We haven't even extended yet, so. That old model is better than what I'm presently using just for my own strategy. Look at that. That's going to slap me in the face and say, now go, leave. I'm taking your money. You've had enough and you're leaving. Me. Oh, man. Enjoy. That's the slap down, the beat down this morning. That's like 1 for 7 trades today. How redonkulous is that? Anyway, that's it for me, you guys. I'm done this embarrassing run for the day. I'll see if I can find something this afternoon, but yeah, it's a shit show. It's a shit show. Anyway, I'm done. I hope you guys learned something about stay out of the damn market. Otherwise, you can get your ass handed to you. And mine has been handed to me quite brutally this morning. So I hope you enjoyed the show and the beatdown I just took. So it happens, I guess. You guys have an awesome day. And I'll see you guys on Monday, I guess. Is it Monday? Where are we at here? Is it Thursday, Friday? I don't even know. Oh, it's Thursday. I'll see you tomorrow. It's non-farm payroll. What am I doing? Jesus, it's non-farm payroll. Stay the hell out of the markets. Didn't we say that yesterday? It's non-farm payroll. Stay out. Shitballs. Stay out of the market. It's non-farm payroll. That's the beatdown. I'm sending the love, you guys. I hope you get to see what a beatdown looks like on a non-farm payroll when you're supposed to be out of the damn market, not messing around inside here. Anyway, that's what happens. Anyway, I hope you guys enjoyed your day. You enjoyed the show. And I will see you guys tomorrow. Sending the love, my friends, and I'll see you bright and early tomorrow, and we'll watch to see what non-farm payroll does for the rest of the market. Okay? Enjoy your day.